my dance, make it hurt.
What's up, relentless traders? It's your host, Surreal.
And Huangar, and welcome to episode 5, week 5. Another
Mm-hmm.
amazing week in the market.
Tough week.
It has been. It's been a tough month. I think this month has frustrated a lot of people.
Yeah, and the markets have just been chopping back and forth, and you know, volatility's still wide, and we were both in a drawdown. So, I'm interested to see your portion of your end of week review with such a tough week.
Yeah, and I think that goes back on we've been studying, we've been putting in a lot of work. We had a comment on last week's episode, and we always appreciate the comments and any feedback. By far, we're not pro traders here. This is a documentation of our journey as we are growing, and anything that anybody who thinks they might know something that we don't, who might know better, that is always appreciated, and we encourage it because that's how
Yeah,
we learn as well.
yeah, feedback's great, and even if we disagree with stuff that we say, like I think it's just imperative to as a person in general and as a trader, trading relates so much to life. So being able to be flexible and respect someone's opposing view, or that's how you learn also, because you can totally change your mindset with opposing views, and or if it's not right, you don't have to sit there and argue with people either. You can respect their views as well. So any feedback, any commentary, like we love that. We love to hear from, you guys listening and watching our journey, and, just helping each other out.
Yeah, definitely. And even just that comment, it got me thinking about my setups, and like when my setups come through and they appear, and how I can really manage or really expose myself to different aspects of the market. And I think that really showed through this week. So, I guess without further ado, we can dive into our end of the week reviews. What do you say?
Yeah, let's do it. Go ahead.
Okay, so this week I'll start really quick. Let me share my screen. Um, for this week, I did trade. I had 3 trades that I really want to go over. It was Microsoft earlier in the week. That was a small loss. I'm not going to show the chart for Microsoft because that was a demand bounce on the day that we had a very big sell off. I've been looking for those tight risk entry areas. The demand and supply zones that I chart have been working very well, as I've noted for the past couple weeks. Typically, price will sit right around those entry areas, and as the indexes either rally or they fall, these stocks, typically tech, I'm focused, big cap, Microsoft, Apple, Nvidia, AMD, all those, Netflix. So they've been working really well off of these zones the past couple weeks. I took Microsoft off of a demand bounce. It held really well even as the market was selling off. It just kept bouncing at the demand, kept holding its lows. When I got a range expansion candle, I jumped in on the trade. I did go over 20%. It was a very small contract. I went over 20%, which is a multiple of my risk. And I should have sold. I only trade one contract at a time right now just because of the size of my account. Um, and I should have sold, but I was waiting for a bigger move, and that was my mistake, and I got burned for it because I took a small loss.
Hmm.
I respect my stop loss very well, so it's not like I let it go too deep on me. And
Could
then
I
I
ask you a question on that?
Yeah, talk to me.
What do you ever consider moving your stop to break even too?
I have before, but I've seen a lot of times where it'll come back right to that support level, and then like where I entered, maybe my entry was very, very tight, and then it'll bounce and it'll go. So
Mhm.
just because the way the contracts move, I have, but I've hesitated doing it when I see that maybe the play is about to work against me. Just because
Gotcha.
the back of my mind, I'm still
Trying
viewing
to give it
that
room.
support. Yeah.
Yeah.
That's definitely something I'd want to work on though. Moving, if I see something non-constructive in the play, I might as well stop out for break even and not take a loss on it.
Yeah.
Yeah.
Because you could
So
always get back in you could always get back in, later too on a reentry, but, yeah, I was just curious to ask you about that because, um, I don't think I've seen you utilize that method too much before, so I was just curious on if you were starting to implement that or think about that too more recently to, because if it ran 20% and then it comes all the way back in, would I guess the question would be is like, would you rather stop out break even or, and this is the actual question, would you rather stop out break even and then wait for a reentry? Or would you rather more often than not just wait to see if it's going to come and actually hit your stop?
yeah, that would make sense. I mean, a lot of the more pro traders that I follow, and a lot of times they will say that too. They'll be like, if I get a non-constructive like pullback, like if I see
Hmm.
that something is coming back in, I won't even let it hit my stop. I'll just get out.
Yeah.
Which would make
Mhm.
sense. I'd rather a small winner than hit my loser. You know what I'm saying? Like there's no purpose in letting it come back, especially if I see it's non-constructive.
Yeah. I
Um,
think that'll come with time and execution too, just like you said. But that was just
definitely.
interesting. I just wanted to ask you about that. It's just
Yeah, yeah,
interesting.
of course. And then the one I really want to talk about is Netflix. Netflix was very it was amazing for me this week. I mean, it put me back in the green from a 10% drawdown. Like I said, my account isn't big, but I really took advantage of the move on Netflix, even if it wasn't a huge huge move. Um, I took Netflix. The biggest trade I took on Netflix this week was on Thursday, and I took it long. The day before, a lot of people were reporting earnings, good earnings. Tesla reported this was a huge earnings week. Tesla reported, Apple was reporting the next day. Netflix had a huge buy, had a couple inside days, and it had a huge buy by I forget who. Um, for
Pershing Square, Bill Ackman's hedge fund. Yeah.
yes, it was Blackman, and it was for I mean, it was a pretty big quantity. So Netflix gapped up overnight as well, alongside a lot of these big tech stocks. Um, so yeah, I have on my screen right now NQ and Netflix. Netflix is on the left, NQ on the right.
Mhm.
And you can see very well that most tech follows. These big tech stocks follow the indexes to a pretty good extent. But you can kind of comparatively see weakness versus strength in some of these. So on those first 10 minutes, you can see Netflix sold off. And then on the second 5 minute candle, it put in a very, very tight range. And I'm talking about like you can tell it's very tight because Netflix has a very big spread when it comes to candles. And then on the next range expansion candle, I don't know if you'll talk about this too, but because I know you took this trade, we were
Mhm.
on voice. We saw that volume expansion. For me, that was a volume expansion through VWAP. I was seeing if there was going to be a rejection on that VWAP candle, which there was, and that's what I used to get in and keep my stop at the low of the day.
Mhm.
Just kind of roughly at the 380 area. From there, I mean, I wasn't even negative at one point. I mean, you can see this expanded very well. We only had one red 5 minute candle, and this came and tested VWAP and bounced really well. And then I saw that big volume expansion candle right towards the top when it hit 394, 395. It closed very strong, and I kind of had you in the back of my mind there. If it's a strong close, just kind of wait out to see the next candle. If you get a continuation, you can still get a bigger move. So I did. I gave it a little room. That next
Mhm.
candle tried to push, and then by the time it took out half that big green expansion candle, I decided to get out for about an 85% winner on that contract, and that kind of put me back in the green for this year so far,
Mhm. Mhm.
um, for 2022. So, I think that really set the tone for me going into the next couple weeks, because we've spoken about how tight, how those tight risk entry areas are money. I mean, literally.
Mhm. Yeah.
And so I took a Netflix trade the next day. Also, as the market was, opened up weak, sold off. It was literally the same trade in reverse, because I took puts on it. I waited for a retest of high a day or close to high a day through VWAP, and as soon as we broke VWAP to the downside, I took a put on it, and I sold for about 18% winner on that contract as well.
Mhm.
Pretty quick, 15-20 minute winner. So that's these executions are really starting to really starting to flow and really come into the light for me personally.
Yeah, I think that was a game changer too for us, and like we talked about in previous episode, is just focusing on the low risk areas where you can know for a very small amount of money if you're going to be right or wrong very quickly, and there's no, and then it also it also kind of builds that conviction too, and we'll talk about that later within setups, but once you start getting some experience with it successfully, like where you can have a tight stop and you can actually start executing trades and nailing down profits on them, it totally builds out your conviction on the entry tactic.
Yeah. So even if it's like, even if it's not a setup that I'm used to, it is a setup that I'm now, now studying. It's the same concept as my supply and demand. Just the supply and demand zones, they line up with certain areas of interest on the chart. But I am looking for the same areas, just because of my time frame, I'm able to get moves that I want for sure.
Hmm.
So it's definitely something I'm going to be studying here this weekend, moving forward, executing, because of how tight I can keep the risk.
Hmm.
So definitely looking forward to that. And I guess if you want to dive us into yours.
Yeah. So same thing for me this week. Like I started out, we both were in a drawdown so far this month, right into the new year, and a couple of fumbled trades put me there. They were actually winning trades, but just because of PDT rule and how I was like handling the execution, some of them turned into losers. One trade, the DWAC trade, like I discussed a couple weeks ago, where it was a winner, but because of PDT and I couldn't sell same day, like it came in on me. So a couple of like fumbled mistakes, small mistakes, but I kept my losses in check. My goal this year is less than 5% or below $400. That's where I want to keep my losses contained to. I don't want a loss to ever be bigger than 5% or be larger than $400 total value. So, with that in mind, I have a very small box that I'm shooting for to keep my losses in. So, even though I had a tighter stop on that DWAC trade, like I talked about a couple weeks ago, having that stop loss on the account loss total that I want to do per trade kept me alive. And, I learned from my mistakes the past few weeks, the small mistakes, and I use those as teachers. I don't get upset. I don't, it sucks being in a drawdown, but when you're in a drawdown, you got to stay focused. And, that's pretty much what I did. I just kept pushing this week to execute, look for high probability intraday trades. And, you and me took the same Netflix trade, trade off the low from that tight area. Great move. Could have secured more. We talked about that. We were when we were in the same trade. You had actually already sold out, and I was using a lower support area when it started pulling back heavy to see if I could play it for a bigger move. And we discussed too how you gotta like you can't like for me at least my problem is greed, and especially in this environment, like I can't be swinging for the fences, and that's a big problem of mine because I'm a very aggressive trader with entry and size,
Yep.
and that's great when my setups are in favor. But in these choppy volatile environments, like you get a nice quick volatile move to your direction, And it's like when you see that big green candle on whatever time frame, like I think we were watching the 5 minute, and it was like three green candles, and then it was like this big, huge green candle through a resistance, and it's like it's always the same. It's like I should have sold into strength there because every time I let the price come in on me, it'll hit a level, it'll bounce, do a little bounce, and then it just comes back in further on me, and it takes me out into weakness.
Yeah.
So, I ended out with a $192 profit on that trade, but at the height, it was like $450 profit on that trade in like 15 minutes. So it's like seeing those little nuanced things for me this week was big. I did take two longs on Netflix. I took that long that we were in, and then it actually, when it pulled back, it consolidated again, gave me a tight entry, and then it tried to break out of that same resistance level, and I took another long, and that time I sold quicker into strength for another $200. So got some nice trades on Netflix, two winners, two longs. I'm using my same my same swing trading setups. I'm just taking them to a lower time frame because they're still applicable on multiple time frames. So
Yeah.
in this choppy environment, you got to be a quick hitter, you got to be a day trader, and if you can't day trade, then that's what we were talking about last episode, which people might not agree with, but if you can't operate or if you don't have a setup or a strategy for intraday tactics, long or short, and you're a swing trader and you're only, long bias, you only trade to the long side, well, then you got to sit out if that's your game. If you do it really well when the market turns good, you're going to make tons of money. But
Yeah.
for me, that's not my goal, but I have the awareness in the understanding of my strategies to kind of operate within that day trading time frame as well. So, I do have a lot, not a lot of experience, but I do have a good amount of time trading intraday, and it's working for me in this tough environment. So I'm just going to keep focusing on those tight risk entries, keeping my risk very, very tight. And now I'm going to start to pivot and start to lock my profits down into strength quicker. When I see that strong movement in my direction and there's a good amount of money on the table, I'm gonna be quicker to take that money now just because of the environment we're in. We're not really in a trending environment right now. So if we got a rally in the markets ahead of us the next week or so from oversold levels, great. I'll look for, I'll keep my situational awareness and I'm gonna pivot to those swings.
Yeah.
But until then, until we start seeing a little bit of follow through, I'm still operating on a intraday time frame. I'm looking for those tight risk areas, and I'm just trying to chip away at that drawdown. And like everybody can see from the thumbnail, me and Juan were both down. I was down probably 11% at one point
Yeah. I was down
over the
10.
past over the past 2 weeks, and so obviously these day trades have helped us chip away at this drawdown. And for me, as Juan is a day trader anyways, so he's just going to keep day trading. But for me, I kind of had to, like, I was at that crux where I said, okay, I need to either switch to an intraday time frame and stick to my swing trading entry tactic, which is I look for those tight areas and then look for expansion in the direction, and I take the trade in that direction with a tight stop. And so I can still do that on an intraday time frame, but I have to be very patient and very selective for high probability setups because you can't just be trading like a madman every day. You got to be focused and take the good setups because in a tough environment, my main goal, and this is always my main goal, is to not lose money. So if I can make progress safely, that's great. But I don't want to be taking every intraday setup that I see. Like I'm looking for, you know, index confirmation on the intraday time frame, meaning I'm waiting for the index to kind of like show some strength, and then I'm looking for a setup in the direction that I'm trying to take with the index, whether it's long or short. So,
Yeah.
but
Definitely.
came back from that minus 11% drawdown, and now I'm back green on the year, on the month. I finished green, up 1% on the account in a tough environment like this. Like that is a huge accomplishment for both of us.
Yep. Surviving, man. Surviving has been huge for anybody in the market at this point. If you I don't want everybody to be like fooled by Twitter. At the end of the day, a lot of people will post gains on Twitter, but then their losses will be like exponentially bigger than their wins. As we've seen the past couple weeks, a lot of Twitter gurus and stuff are being taken out of the market just because like they're they're not being bailed out by a bull market anymore. Stuff isn't churning up like they used to. These things are churning left and literally up and down within minutes,
Yeah.
as we've seen. So, this is a really hard environment, man, and it's not just us who've seen it. Anybody who trades knows this has been a tough environment to trade in. But we are grateful for the place that we're in. I'm grateful that we're trading in this environment and that we're learning this environment because when the market, quote unquote, gets easier, you know what I'm saying? It's not this tough. Um, we're gonna be prepared for anything.
Yeah. We're gonna expand more to the upside. And right now I think a lot of people who are newer, or you can't look away. I found myself last year 2021 when the market turned really hard around that March timeframe. I just kind of like, I didn't want to look at the markets, I didn't want to scan, I didn't want to do anything because it was just like depressing. I'm like, oh man, like I can't trade, da 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 da. And like, you can't look away, you have to show up every day and study the markets and what's going on, study the indexes, like how they're performing, run through scans and look at stocks from different sectors, and like what are they doing, are any showing strength or any showing weakness, because the biggest opportunities to the long side come out of bear markets and corrections, and no one knows when that's ever going to come. So if you're not scanning, if you're a swing trader and you're not scanning and keeping in tune with the market, and making notes and documenting these cycles in these tough times, you're never going to be there for that pivot point when the market just turns up and starts ripping. And that's when stocks make their biggest moves. We don't know which ones, which is why you have to scan. But you want to find those stocks, and if you're a swing trader, you want to get pieces of that big move. Or if you're a position trader where you're half investor, half trader, where you're kind of holding for those longer moves, this is going to be where the money's made. As soon as this bear market or this correction bottoms, whenever that's going to be, you need to be there to capitalize on that. And you want to have mental capital and not be drained, continuously wasting your physical capital, your money, on crappy trades, or investments that, where it's not time. Wait for the market to show you when it's time. It'll start moving off the lows, making higher lows. You'll see stocks starting to break out and form bases. And these are all the things that you have to look for. But if you're not watching and paying attention through these tough times, you're never going to learn and improve.
Yeah, definitely. And I think that really like kind of leads us right there into our topic for the week. We're gonna kind of talk about setups and how that focus on setups is really gonna help overall with what you said, mental, physical capital, and how the nuances of those setups really lead us into that consistency zone.
Yeah. And it comes back to like focusing too. So like we can just go right into the setup topic. So to start out, like I know you wanted to talk about R ratio. R ratio essentially is just risk. It's just risk. So if you don't know what risk management is, or you don't know what an R ratio is, it's essentially your from your entry point, wherever you enter into a position, to where your stop loss is set, that distance, whatever that is. So if I enter a stock at $100 and I have a $1 stop, then my R ratio is $1. So every multiple of that, stacking that, is the risk to reward ratio. So if I enter stock at $100, I have a $1 stop at $99. Well, as a trader, you want to always aim to make 2 to 1, at least $2 to the $1 you're risking. So that means that I would need to take profits at 102 or higher for that to be a good trade.
Yep.
So when you're talking about setups, whatever your setup may be, it could be, you could say, okay, when the RSI is at this level below 30, and I see a candlestick reversal pattern, that's my trigger. That could be a setup. Whatever it is, whatever your setup is, as long as it's repeatable and you see it in the market and it puts the probabilities in your favor, that is a setup. That's what a setup is. You're just exploiting a repeatable condition in the market over and over and over.
Yeah, and I think it's important to keep that in mind when trading even contracts. I mean, options contracts are not, people they're super leveraged. A lot of new traders like go to them, and it's very easy to get stuck in like the big winner cycle, that you're always shooting for the 150% winners. And
Or higher.
yeah, you're not gonna get that all the time. That's not gonna be something that happens a lot. I focus on, the 30, 40 percenters right now. I think my average for I think my average since I really picked up some steam in December has been about 32, 33%. And my my rate, like my loss percentage is about 16%. Usually I tend to like look for those 100 to $120 contracts, and I'm risking about 10 to 15 cents on those contracts.
Mhm.
And I'm taking profit at around 30 to 40 cents above my entry, just to be
Right.
able to keep that ratio positive. Even if the percentage doesn't line up exactly, I'm trying to keep that R ratio positive on my end. And it's a little
So
harder with options
let's
contracts because of the way they move.
uh-huh. Let's tie that into the setup though. So what so talk about the characteristics, and I know we sound like a broken record, but to for that R ratio to overlay that with a setup, it comes into what? What would you say that comes into when
Your
you want to
entry,
overlay that?
your
There
entry,
we go, right? And
yeah,
that comes back to the tight risk entries that we always talk about. And that's what makes sense is like you want to keep that R ratio as tight as you can, where it makes sense with the math of your trading to where you're able to stay positive. Um, but also, you got to fit that, you got to see how that puzzle piece fits into whatever setup you trade because the idea is to risk the least amount of money to make the most amount of money. And the quicker you realize that the smaller you keep your losses, it just lets your winners work so much better for you. And like they both are their own thing. Like having a setup and that entry trigger, what's going to trigger you to get into into a stock or whatever you're trading and then being like, okay, well, how can I marry that to a low risk entry? You know what I mean? And tying those two together because that is where that is powerful when you can figure that out, that combination out.
yeah, and it's definitely, I mean, we really can't stress the entries enough, and not just for anybody else's sake, but I mean, we've seen the power of it in the past couple weeks. It wasn't something that we've spoken about before, but it's not something we were super focused on. We were focused just on on our setups and still executing. For example, me key level breaks, and then they were fading super quick, but then I was buying towards that break when the move was already extended, $3 or $4 from the lows of the day.
Mhm.
And then you started bringing up that, like, you could have entered here on this scan. I'm like, okay, that makes sense. And then you brought it up again on my next trade. You could enter, and I'm like, okay, that's starting to make more and more sense. But it's not really till you put that into action, till you put that into practice, that you really gauge the power of it. And
Yeah.
it's about that, that repeatability. That's what's going to bring on that reliability.
Hmm.
And it's all about continuing to see it, even if you're not taking the trades. Note it down, and like I said, it doesn't matter, like you said, it doesn't matter what your setup is. If it's, the RSI at 30 and the candlestick reversal pattern, just take note of it. It worked this time, is it going to work the next time? It worked the next time, is it going to work the third time? Keep a journal on that. Really take notes, do a deep dive on the
Hmm.
setup. See if your setup is repeatable, and does that repeatability, is it gonna give you that conviction and that confidence to then go in with your live account with live money and be able to execute? Because if you're getting super, and I had that execution problem. We spoke about that this week. You and I, surreal about. I get execution anxiety. Like, why was I getting execution anxiety? It's because, I possibly, is it because I don't believe in the setup, or is it maybe something else underlying? Whatever it is, that you're gonna be able to really take out the, how do I put this?
Uncertainty.
Yeah, that you're gonna be able to take out that uncertainty by continuing to note down when it does and when it doesn't work. Really
I
getting
like
into that
that.
nitty-gritty.
I like that. That is perfect. That is a perfect example of what you should do. And that's where, like just like you said, That's where the deep dive comes from, because you get that conviction and you get that confidence. It's a lot of people think that trading is like, oh, I have to learn, like I have to learn from trading. But a lot of the work is done off the screen time. Like a lot of the work is done from when I say a deep dive, it's synonymous with back testing. A lot of people say back testing. That comes more from like, systematical traders and stuff too. But discretionary traders can back test too. All it is just going back and studying as many examples as you can. Like I did a deep dive on my one setup, Momentum Burst. I looked at every stock in the stock market a couple months ago. Literally, that was worth looking at. It had parameters: stocks above $3, stocks with 100,000 volume or more. So it turned out to be about 3,400 stocks, and I went through every single chart for a 6-month period for every single chart for 3,300 stocks, looking for my setup. And so, when you see it so many times over and over and over without even having to trade it. I didn't even have to trade it. I didn't trade it. I didn't trade that setup once. And I did that deep dive, and it took me about a month or two to do it. And then out of that 3,300 stocks, I went back through and I pulled the high quality setups out of that, and I identified them. And so that's how you can that's a way you can build conviction and confidence when you see over and over and over. This is a repeating pattern. It works. Like I see it on multiple time frames, not only on the daily, the weekly, the intraday, but so when you have an idea for a setup, that's kind of what you need to do to get over that. Because if you're just going to jump right in and trade it with live money, like it's so inefficient to learn your setup that way. And it's kind of arrogant too to say like, oh, you just need to trade. Like it's inefficient. You're learning from trial and error in real time. So
Yep.
not only are you having to wait, for that setup to appear, like then you have to trade it, and you don't really know how you should be trading it because you haven't studied it enough. But think about if you took a month and you just went back and looked for as many examples as you could, and then you got really thorough and made notes on it and said, what's the difference between a good one and a bad one? Which ones worked the best? Which ones failed? Why did they fail? Why did and that's where that conviction and confidence comes from. And that's how you can get better quicker without, losing a lot of money.
Yeah, the that conviction, that confidence, it's gonna build. It's gonna build slowly. You gotta keep in mind it's a process, and it's not gonna happen overnight. It's something I'm still currently dealing with. But it's something that has slowly gotten better over the course of the last 2 months. Especially, the last 2 months have been. I would definitely say have been a more consistent phase for me versus the 6 months prior to that when I started trading. Just because now I had my setups. And now I was starting to execute more and more. And the more I execute, the more confident I become in the setup. I get less afraid of clicking the buy or sell button, and less afraid of being wrong. And it's human psychology. It's fine. You're gonna be wrong. It's a stock market. You're not gonna be right all the time. It's not about being right all the time. It's just about keeping your losers small. That's all. That's
Mhm.
that's all it is. It's about really managing that risk at the end of the day.
Yeah, and the better you get at your setups, and like if you have one that's, that's really high probability and it's a really good setup, and you have that conviction, the confidence, the setup is repeatable, when it's reliable and what market conditions it's going to work, what market conditions it might not work so well, and you can execute it that way while maintaining really good risk to reward, like the risk to reward mathematics on top of that, that's like set up for consistency. Because if you're consistently focusing on that and you're managing risk around it and you're studying it and getting better, then your execution should get better within that, especially if you're studying your past trades. And it's just like it's a feedback loop, and you're naturally just going to improve, and you're going to see, hey, this setup in this type of market environment, it pays me money. Like that's going to make you want to do more of that. You don't want to do and you'll want to do less of other things that you may not be as good at right now, or you haven't studied as deeply. And you're going to want to kind of do less of that and try and master, the thing that's working now. And then, once you master that one thing, you have a setup that potentially could pay you for life, depending on how long, how enduring your edge is in the market. Because things do change, over time, things may lose their edge. So, um, it's just you can see once you find that one setup and you realize that, and you marry all these things, good risk to reward ratio. If you once you find that repeatable pattern, or confluence of multiple indicators. If if I'm not a big indicator guy, but whatever you find, that's your setup. Go back, study it, and you get that confidence, and then you start executing it while managing risk, and then you start seeing good results, and it just builds. It just builds and snowballs, and then you master that, and then you say, "Whoa, maybe I can add." Maybe you find another setup, or you start studying for something else, and you slowly add those tools to your toolbox, and you become a well-rounded trader, and you start to build a strategy of multiple setups of when to use in different environments if that's what you want to do. Some people only pick one setup, and maybe it's a long breakout setup and it only works in good market conditions. Well, that person can make a killing when the market's good for them. They may need 1, 2, or 3 months in a year to make a triple digit return. So, there's no right or wrong way to do it. But I would say find one thing first, focus it, master it, and then you'll have that process to pick up another setup, and then begin the working on that to master that one as well.
Yeah, perfectly said. Just because that testing is gonna be key. Just add those, keep adding those tools to the toolbox, and eventually it's gonna, it's really you're gonna see the difference, and a lot faster than you expect, especially if you're putting in the study time. To finish off, I think adding something really quick, journaling. Journaling is super, 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 super important. I cannot stress enough how much of a difference journaling has made in my trading personally.
Yeah, and whatever software you need to use to track all your stats and all that. I mean, there's so many. There's Trader Sync, there's Trader View. Those are two really good ones. Edgewonk, I try to use that one. It's a lot more manual entry, but there's good ways to view your data in that. Even if you make an Excel tracker for yourself, just something you have to track. You have to track. That's like foundational. If you're not tracking what you're doing, you just
You won't
forget it
learn.
week to
Yeah,
week,
you
and
won't
you won't
learn.
learn. You'll never learn. You'll just keep churning. You'll just keep churning and floating from trade to trade. And there's like, who wants that? You want to consistently and reliably make money every month, not every month, but every year, right? You want to be profitable every year. If you're not tracking and you're not journaling, use this to prove me wrong. Like, you're not going to make it. I'm sorry, that may be blunt, but that's how important I think journaling is.
Yeah, definitely. I think we can leave it off for there. It's a lot of information. Definitely, setups has a lot of nuances, and I think we covered good ground there. What do you think?
Yeah, it was great. It was a good general discussion. We ran a little over time, but hopefully this is useful to some people. Thanks, guys, always for listening. Remember, manage your risks, stay focused, and be relentless. And we'll see you guys in the next one.
See ya.